If an e-commerce brand founder was recklessly cranking budgets in Facebook ads without ever looking at the ROAS, looking at the revenue in Shopify, we would rightfully consider them to be maniacally irresponsible. Yet somehow it's totally normal for a founder to spend tens of thousands or hundreds of thousands of dollars a month on random expenses and investments without actually keeping track of where that money's going or what it's doing. While running an e-commerce brand is probably one of the most exciting businesses you can run, at the end of the day, it's still a business. And while the exciting stuff is taking place in Facebook ads and Shopify, there's a lot of incredibly important stuff that's going on in your business that doesn't live there. But if you want to be a serious business owner who's building a brand that has a potential to scale, you have to be on top of your financial health. So in this video, we're going to go over what an accounting and finance function actually does for your company and when you should actually start worrying about implementing one. So to start, as an e-commerce brand, we can think of what our accounting and finance function does for us in terms of 3 layers. The first layer is the most basic, and that's just your bookkeeping. This is where we just keep track of all of the financial transactions that are taking place in your business, categorize them appropriately, and attach any sort of relevant documentation. This way you have all of your information neatly organized if you ever have to refer back to it, which you often will. Now at its most basic, this might just be categorizing that this particular credit card transaction for Klaviyo is an email software expense. But it also helps with the processing of data that you need to take action on. So for example, if you place an order with your manufacturer, you're going to want to create a purchase order to keep track of that. Then when they ship the goods and you receive it at your warehouse, you're going to want to receive a bill and make sure that it matches the purchase order. And then you're going to want to put that bill in your system so that you know that in 30 days you're going to have to make a cash payment to the manufacturer. Or if you sell something to a wholesale customer and you issue an invoice, you're going to want to make sure that you're keeping track of whether or not the payment for that invoice has come in. If not, you want to be well aware of that so that you can keep following up with them until they actually pay. Now the bookkeeping is important for you to be doing from day one just so that you have access to all of that reference data. But you start to get a lot more value out of all this bookkeeping that you're doing with the second layer of your accounting and finance function, which is reporting. This is where you start to compile all the data from the bookkeeping process into reports that you can use to understand how you're performing financially. Now the most common reports are going to be the 3 main financial statements: your profit and loss, your balance sheet, and your cash flow statement, but there's a lot more that can be done. For example, you might need ad hoc reporting to understand your inventory balances for different SKUs and which locations they're in. You might want to understand your contribution margin for your direct-to-consumer channel versus your Amazon channel. Or you might want to know your gross margin by product category. The process of reporting is how you get an actual understanding of how your business is doing, and understanding is how you end up making decisions. In the same way that you wouldn't decide how much to be investing into Facebook ads without ever looking at your ROAS or your revenue, you can't make decisions about your business without looking at your financial performance. Now, if you have strong reporting, you're already taking a big step to understanding your brand's financial performance. But the third layer is how you really take it to the next level. In the third layer, you're no longer just looking at historical financial performance like in the second layer, but now you're looking into the future and outside the strictly finance realm as well. One of the most important examples for an e-commerce brand of that is when you do financial forecasting. Being able to forecast your revenue, the impact that that has on your inventory levels and when you need to make reorders, and what sort of impact both of those have on your cash flow is crucial to be able to scale a business. Some of this is going to be based on an extrapolation of historical data and looking at the relationships that exist in the historical data. But good forecasting also incorporates knowledge of your business, of your market, and also the strategies that you're planning on deploying. There's also an entire element around bringing a finance lens to non-finance decisions. So that means making decisions on things like certain financial investments, hiring decisions, product launches, and channel expansion. And then of course there's the funding side of things, deciding whether or not you're going to get additional cash into the business either through raising investment or through debt. So now that we have a general understanding of the various layers of an accounting and finance function for an e-commerce brand, when do we actually start implementing each of these layers? Now, as an accountant, I'd love to tell you that you need all of these layers from day one, but pragmatically, it really comes down to making an analysis of the benefit that you get from each of these layers and the cost to implement each. Now, when it comes to the first layer of bookkeeping, realistically, you do need that from day one, even if it's just for tax purposes. But that doesn't mean you should hire someone on day one. In the early days of your brand, you usually have more time than cash. So at the beginning, as a founder, you should usually be doing the bookkeeping yourself. At this stage, the only cost is the opportunity cost. Every hour that you spend on doing bookkeeping is time that you're not spending building the brand. Then again, the early bookkeeping is simple enough in terms of complexity, and transaction volume is pretty low, such that you probably know what everything is just off the top of your head, so it shouldn't take you that much time. However, as the business grows, the complexity of the accounting increases, the transaction volume is going to go up, and it's also harder to keep track of everything yourself, so it is a lot more effort to do the bookkeeping. At the same time, the larger the business gets, the more value each unit of your time and attention put towards the business has. So the time that you used to be spending on basic bookkeeping now has a much higher opportunity cost. So eventually you're going to want to outsource this, because otherwise you're just wasting time that can be spent on building the brand. When it comes to reporting, you don't necessarily need it from day one, but it does follow a similar train of thought. In the early days when there's a low transaction volume and you're doing everything yourself, you can probably have a pretty good sense of the financial performance of your brand just living in your head. As things become a little bit more voluminous, you might start relying on some of the more sophisticated financial reporting that'll come from your accounting software. However, that is predicated on actually good bookkeeping being done for the reports to mean anything. And as complexity goes up, a lot of times the basic reporting that you can get from your accounting software won't be in-depth enough or customized enough for you to get the insights that you actually need. And when it comes to the third layer, this is usually something you can wait until you're somewhat sizable to worry about, but it's really a function of how quickly you want to scale. If you're growing at a very casual pace, then usually just looking at your historical data is enough information and you don't need to do too much aggressive planning into the future. But if you want to scale aggressively, then you really need to have proper forecasting done so you can see ahead of the curve. You'll also likely need some sort of sophisticated help with balancing debt and investments and how to build up your capital. But to ultimately bring all that home, what are the main things that you should be looking at to kind of decide? The first thing is complexity. So for example, if you're selling on multiple channels like wholesale and DTC and Amazon, you should also consider if you have a large amount of inventory of different SKUs or if you're doing your own manufacturing. Consider if there's a lot of activity to handle in terms of accounts receivable and accounts payable. The more complexity you have, the more important it is to bring outsourced bookkeeping help as well as possibly better reporting. The other consideration is the speed at which you want to scale. If fast. If you're trying to scale quickly, then you need your information to come to you fast so that you can make decisions rapidly. You need to know within a week of a month closing how you performed in that month. You can't be looking at things 3 months behind. Additionally, if you're scaling fast, you're probably operating on thinner contribution margins and tighter cash flows. So it becomes a lot more important to get your reporting quickly and also have that future looking forecasting. And then of course there's size. If you just want the easiest rule of thumb, then if you're doing something like 50 to 100K of revenue a month, it's probably worth outsourcing. But at the end of the day, for all of this, it really just comes down to what you're actually going to do with the data. There's no point in planning a super complex workout and what days you're going to hit what muscles and how many sets of which exercises and what weights you're going to use if you never actually go to the gym. So if you're never going to look at your financial performance, then fine, don't bother getting it done. But any serious entrepreneur knows that you need to have an acute understanding of your financial performance and your financial health if you want to be able to make decisions to scale your company. So if you're such an entrepreneur that wants help with your brand's accounting or finance, feel free to reach out to us. We're e-commerce accountants and that's what we specialize in. If you're not ready for that and you're still looking at your financial information yourself, you might enjoy this video on how to read a financial statement. But other than that, thanks for watching the video and I'll see you next time.